the U.S. government just published its annual financial report, and we only lost 4.1 trillion in fiscal year 2022, just a trillion worse than the year before. A trillion can't be that bad, right? Trillion seconds ago, you guys, was 31,688 years ago. A trillion is a lot, especially when you're already broke and insolvent. We were told that Social Security has a funding deficit of only $75.9 trillion.
For the past 3 years, Miles Franklin President and Chief Executive Officer Andy Schectman and several other experts have warned about a barrage of coming financial and economic storms for the United States economy. Now they say we are well past the warning stage. We are right on the precipice of one of the biggest geopolitical shifts that the world has witnessed in modern times. The U.S. has made such a fine mess of its affairs. Everyone can sense the fatal weaknesses in the giant, so they are swapping in for the kill all at once. According to Schectman, a reputable speaker on economics, global investing, and foreign currencies, reports of changing geopolitical dynamics and multipolarity trends are not to be taken with a grain of salt. With its position as the world's biggest economy, the United States has always been open to critical observation from allies and enemies alike. But there has been nothing but tripling debts and disappointing fiscal and monetary policies to see for at least the past decade. While countries like China and India grew their economies exponentially, the United States essentially relied on its status as a central power and the issuer of the world's reserve currency. According to Schectman, all that is unraveling fast, and the world is shifting toward a period where the dollar is not the biggest player in the room. The Miles Franklin president recently appeared on the New Gen Mindset pod, where he discussed the shifting geopolitical dynamics, the impending collapse of the U.S. economy, and most importantly, the scramble for commodities, including gold, silver, platinum, and zinc. It's no news that central banks are loading up on gold and other commodities in record numbers. According to a report by the World Gold Council, central banks accumulated gold at the fastest pace on record in the first 2 months of 2023, amassing a total of 175 tons of the precious metal. This is the strongest demand at the beginning of a year since 2010. According to the report, Singapore purchased 51.4 tons, Turkey 45.5 tons, China 39.8, Russia 31.1 tons, and India 2.8 tons. The last three are BRICS nations, while the first two, Turkey and Singapore, are looking to join the alliance. Schectman says there is definitely a pattern here, and it doesn't bode well for the United States and the dollar. We will now bring you Andy Schectman's interview, as the famous bullion dealer discusses the current state of the U.S. economy, China's de-dollarization agenda, and how central banks are manipulating gold prices so they can accumulate even more of the precious metal. Please watch the video to the end, hit the like button, and subscribe to the channel for more insightful discussions from the biggest commodities analysts and expert investors. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Past 3 years, you go back and watch the videos I've put out, I was talking about BRICS and the Belt Road Initiative and the de-dollarization trend before anyone was. On every YouTube video I have done since 2020, it has been the central theme of what I have been talking about, how gold was reclassified by the BIS, how the central banks not only were repatriating it from the New York Fed and the Bank of England, but going on massive buying sprees, how the suppression of the price of gold has allowed them to empty the shelves of the available stockpiles in the London Metals Exchange and off the COMEX, and continually accumulating more and more gold, where, last year, 2022, the central banks bought more gold than at any time in the last 55 years, the second most in history. But before we get there, I think you need to look at what's going on. The U.S. government just published its annual financial report. $76 trillion in IOUs. That's not even counted in the $31 trillion debt, right? A country where in 2019, $5 trillion in tax revenue, which is what they brought in last year, almost to the button, would have covered the entire deficit and left $500 billion left over to pay down the debt. But instead, they went over that by $1.375 trillion. to spend $6.27 trillion. I mean, it's just madness, insanity, where $706 billion was used to pay the interest on the national debt. In other words, they had to borrow money just to pay the interest on money they had already borrowed. A country where $5 billion to secure the southern border and stop what is now killing more teenagers in this country than anything, in terms of how kids are dying, it's from fentanyl poisoning. That's the largest cause of death. 5 billion is too much to do that, right? But 114 trillion to get us this close to World War III, well, that's okay. We're giving money for the Ukrainian pensions for the government is okay for us when there's a $1.75 trillion pension shortfall in this country. Our leaders have their head so far up their ass, it's not even funny. And when you talk about reasons to see global de-dollarization, how about the November meeting of the FDIC Systemic Resolution Advisory Committee? And anyone who hasn't heard this yet ought to double time to YouTube, because it leaked out there. This is the division of the FDIC, who, by the way, has, I don't know, like under 200 billion in reserves backing 9 trillion in assets. And this group, the Systemic Resolution Advisory Committee, says, hey, there's going to be bank runs and bank failures, and the banks already know this. There's going to be bail-ins too, because bailouts are illegal. You're an unsecured creditor of the bank, but hey, listen, us members of this committee, we have a lot less faith in the creditworthiness of the banks than the public does. So the unintended consequences of leaking this out to the public will create runs on the banks. But the public needs to know that there will be bail-ins, but we just probably shouldn't let them know that we all know it's coming.
Less than a week after taking First Republic, the U.S. banking sector crisis has set its sights on its next victim, PacWest Bancorp. According to reports, the Los Angeles-based mid-sized lender is exploring all options after its stock plunged by over 50% in early trading on Thursday. Even after an over 80% recovery on Friday, the stock is still down by over 79% year-to-date. According to billionaire investor Bill Ackman, there will be further systemic risks in the U.S. banking sector if corrective measures are not immediately taken. Ackman noted that the next weakest bank, which is now PacWest, could be the next victim, and that no regional bank can survive bad news or bad data amidst constant drops in stock prices. As each domino falls, the next weakest bank begins to wobble, the billionaire investor noted. We are running out of time to fix the problem, and we need a system-wide deposit guarantee regime now, he added. Since the global financial crisis, the U.S. Federal Reserve has charged itself with propping up the traditional finance industry. Ironically, we are now living in consequences of the unchecked spending of the past 2 decades. So are the regional banks toppling on a weekly basis? The FDIC just coughed up $13 billion to save First Republic, but does it have the resources to save PacWest and other regional banks that could go next? These are questions that all investors must seek answers to, as these horrific events continue to unfold. Let's get back to Schectman's interview as he speaks further on why other countries are ditching the dollar and loading up on gold and other commodities.
When you talk about what's happening to this country, to the mismanagement of the world reserve currency, the brain-dead monetary policy that we have, and the irresponsible fiscal policy, it's embarrassing as far as I'm concerned. And it underscores why a good portion of the world is saying enough with you. Not only are all of these things a reason enough to ditch the dollar, but the weaponizing of it and the perceived hypocrisy of the West, where, you're okay. You can spend dollars, but no, not you, Nick. We're going to sanction you, and we're going to kick you out of SWIFT. We're going to freeze your assets. The EU just said, not only are we going to freeze your assets, we're going to confiscate them and use them to rebuild the Ukraine. And my point is, when you weaponize the world reserve currency, you have just incentivized all of these countries to coalesce against the West. And that is what we see happening in all of these countries. The central banks, the ones that have bought more gold than at any time in the last 55 years, they're all the ones that are joining the Shanghai Cooperation Organization, the Belt Road Initiative, and the BRICS, which represent north of 80% of human population. And so when you talk about who's accumulating all of this stuff, it's the smart money. Now, how are they doing it? Why isn't the price going up? Everyone always says. Because the brain dead West is suppressing the price of gold, have been for a very long time, because there's an economic law called Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold. So when you suppress interest rates for as long as we have, you have to kill the canary. And that's what they've done. And I would hope that they are trying for an orderly retreat from these short positions and maybe accumulating it themselves. But the countries that are competing for the small pool of commodities are doing exactly what we've been doing for a very long time, suppressing with leverage the commodities on the COMEX and the London Metals Association with paper, and then draining the physicals. If you were to pull up in post-production, or if you can do it now, the available silver stockpile, just Google London Metals Association silver stockpile, it'll blow your mind. It's straight down. There's only 800,000 ounces there on the LBMA right now. And there's, only 33 or 39 million right now in the registered category on COMEX. Those are the bars that are available for immediate delivery. And yet India imported 304 million ounces of silver last year. The point of it is that these countries are using the suppression with leverage on COMEX and the exchanges to drain the exchanges of all of their commodities, not just gold and silver, aluminum, zinc, those two. Aluminum, 75% of all the aluminum stockpiles at the LBMA left last year, 90% of the zinc stockpiles. You're seeing these countries accumulate war chests of commodities using the suppression. Now, how do they do that? I asked my head trader, we hedge everything. I said, how much does it cost to control a 100-ounce gold contract? He said, $7,000 in our margin account. Controls 185,000 in gold. What if I'm JP Morgan with $1 billion in my margin account? Do you see the perception of reality I can create? I got enough money. I'll just make the price lower and I'll gobble up the physicals, because everyone is fixated on the body of the car. They don't lift up the hood to see that there's two squirrels on wheels as an engine. And that's really the problem here, is that on a big macro picture, the biggest money in the world, who's closest to the information, is draining the exchanges of all of their hard assets, the commodities, and using the suppression and the leverage built into the system in these exchanges to run cover for it. And the ironic thing about it is that right now, for the first time in 3 years, the availability in the retail market where I live is the best it's been in 3 years. And the premiums are the lowest it's been in 3 years. And I can't quite wrap my head around it, other than to say it is a gift.
While central banks are keeping prices low to build their hoard for whatever it is they are planning, will you be taking advantage of low prices to build your own hoard? Or are you convinced that the United States can somehow save itself from the external and internal threats all at once? Please drop your replies and comments on Andy Schectman's in the comments section below. Also, ensure you like this video and subscribe to the channel if you are yet to. If you want similar videos on gold, silver, and copper, then ensure you turn on post notifications and check out our other videos. Thanks for watching.